What's good, ladies and gentlemen? I hope you're all doing well today. So today's video is going to focus on a couple of things. We're going to dive into who is going to be declaring their earnings next. We're going to be talking about why you've got to be very careful about investing in a weak market. That's the kind of tone that we've got right now. We're going to be breaking down Bitcoin price action, Ethereum. I'm going to dive into a little bit of Solana as well. We're going to have a look at what's going on in the indices in terms of the S&P and the NASDAQ, and look at a little bit of Forex, and then dive into what can actually trigger moves to the upside or moves to the downside. Because quite frankly, ladies and gentlemen, it's not looking too good, if I'm quite frank with you. Ukraine are going to get some more, how can I put it? They're going to get some more funding. How do you say funding for a war? Hey man, listen, I plan on having a war and I need a little bit more cash. Yeah, no worries. Just make your way over to the bank and just tell them what you need the money for, and then they should give you the money. Happy days. That's exactly what's going on with the US right now. They have just authorized a bill which has effectively given the Ukraine $61 billion worth of funding, and Russia ain't too keen on that, which means that Russia is going to attempt more strikes. And now that Israel have been parked to the side, we're not too concerned about that anymore. We're now going back into Russia and the Ukraine story. How's that going to impact the marketplace? Well, if investors are really concerned about Russia and Ukraine the same way they're concerned about Israel, then we're probably going to see the same behavior as we saw last week. But this is the problem with war. Once it gets declared, there's the initial reaction, and then it just continues. And that's the sad truth. The Ukraine-Russian war hasn't finished. It's just going to continue. But the market's going to absorb it. Now, we have to pay attention to what's going to happen with oil. That's something we're going to look into as well, because that's really going to be a trigger to decide if assets are going to continue higher or not. Now, a moment ago, I mentioned that we are in a little bit of a weak market, and I'm talking about the stock market. Naturally, we assume that if Bitcoin is going to follow the stock market, then Bitcoin is going to have the same fate as the stock market. But the stock market right now has got a lease of life. Even though Tesla missed its estimates, it's gapped up in the pre-markets. That only means that investors simply do not care what's going on. They see the bigger picture of Tesla, the same way Bitcoin investors see the bigger picture of Bitcoin. Now, if you're a Bitcoin holder, it doesn't matter what price you pay for Bitcoin. What matters is that you're picking it up. And today we're going to dive into Bitcoin on the daily time frame for the holders, just so that we can help you guys understand what we can expect. Given that there's going to be so much volatility this week, we've got Meta declaring its earnings later on at the close of the market. So we're going to be paying attention to that. And hopefully, by the time I'm done with all of that information, you guys will be pretty much sorted out. So let's get with the flavor, ladies and gentlemen. So we get it all started off with a snapshot of the stock market. In front of you, you can see it says, on Tuesday's action, techs and small caps lead the session up. Now, this is a little bit of a problem, and going back to the idea of a weak market. When the small caps start to lead, that means that there's not that many investors buying up the bigger stocks. So that means they're not spending that much money. And we really need to see more liquidity going into the stock market to suggest that the rally is going to continue to the upside. Naturally, that's what we want to be seeing with Bitcoin, because if Bitcoin is following the stock market, we want to see big caps leading the moves to the upside. As it stands right now, in Tuesday's action, we saw that the small caps were the ones that were involved in it, and the tech market as well. Now, you've got to remember, the tech stocks, they are very, very volatile. So you've got tech stocks that are massive in market cap, like Nvidia and Google. You've got then smaller market caps, which are just little companies that provide some cool technological stuff, but they don't really have that massive market cap, okay? Following on with that, it does actually say that the current outlook has an exposure around 0 to 20%. So that already gives us an idea that investors aren't really putting the risk down. How do we verify that? Well, we just go over to the chart right now, and you can see we've got Bitcoin right here, which I'm going to be talking about in a split second. We go over to the dollar dominance, and you can see dollar dominance right now has got a little bit of it's pulled back, and it's starting to try and climb back up again. And when we're looking at the dollar, you've got to remember, if the dollar is going up, then that means that companies or people who have stocks, their stock is somewhat valuable. But if the dollar is going down and the stock market's going down, then that's going to end up rushing investors to think, you know what, what's the point in holding on to these stocks if they are losing their value, not just in the actual price, but in the actual dollar value of the stock. So in other words, if we do start seeing the dollar going down and the stock market following suit, it means investors aren't really favoring holding on to stock. What we want to see is we want to see investors getting rid of their stock and going into dollar, and that would mean cash. Well, if the dollar is going down right now and then we see the stock market going down, then that would only make us see something else. It will make us believe that maybe they could be going into the bonds. And you can see right now that we do have the bonds. They did try and go up towards that 5% mark not so long ago. And now we're seeing them try and work their way back up again, which would then suggest that the bonds market itself is pulling back. But it seems like it's stabilizing inside of this range. The only thing that's going to be marking up the bonds, in my opinion, ladies and gentlemen, is if investors see that tensions overseas are going to start quieting down a little bit. And now that we've just had this, well, this Senate passing the Ukraine aid, that's going to be triggering a little bit of a problem across the board. You can see already, even a little article right here says that Russia threatens to increase strikes on Ukraine over the US aid. So we don't need to be worrying about Iran anymore. I mean, it does say next to it, Senate sends aid package with Iran oil sanctions to Biden. Well, what does that mean? Well, we only need to just go over and look at what's going on with oil. So we flip over to oil and you can see bright as day. We've got oil right here. Here's a couple of setups. And we've got oil, which is very, very choppy. Look at it. It's spiking up to come back down, marking up. And it looks like it's going to try and work its way back down lower and come back into the vector candle recovery. But keep an eye out on oil, because oil is going to be prone to geopolitical tensions. Just pay very close attention to it. If oil shoots up, the stock market is more than likely going to pull back. Okay, now moving on from that, let's just have a look at where we are and when I say that the stock market is somewhat weak. So you can see Investors Business Daily talking about the stock market does jump up, but don't jump the gun. And what they're suggesting is you want to really wait for accumulation days. What do we mean by accumulation days? Well, when you look at this chart right here, this is the NASDAQ. Now, this is the NASDAQ Composite Index, and you can see that we have been doing very, very well. Now, the NASDAQ has pulled back, but we want to see accumulation days in the stock market, which will then fuel the idea of Bitcoin going up. Okay, now think about it. You see down at the bottom right here, you can see that we have got two blue volume bars. Now, they are not above the 50-day moving average of volume. Okay, so this is the 50-day volume on this NASDAQ. If they do surpass this line, it would then suggest that there is an accumulation day. And that's good news for us. That means investors are coming to the market to buy. But right now you can see even yesterday's session, it was higher than the previous session on the Monday, but it hasn't surpassed the 50-day. So that's a bit of a problem for us. What we want to see is, as investors, we want to see volume coming in above average on the NASDAQ and the S&P. And that's really ideally for those who are investors. And you can do the same thing with Bitcoin. In my honest opinion, anyone that holds Bitcoin or wants to start buying Bitcoin and wants to try and improve the odds of buying Bitcoin and seeing a return from it in the short term, pay attention to the accumulation and the distribution days on the NASDAQ and the S&P. That means a distribution day is a day where they sell off. So you would see down here, we've had 1, 2, 3, 4, 5, 6 days of selling, but the selling hasn't come in above the 50-day, which is this red line at the bottom. So that could be a good reason to believe that this could be a pullback with the potential for it to continue to the upside. Remember, the Federal Reserve may not look to cut interest rates yet, so we ain't going to have no Fed pivot. So it means that interest rates are going to stay higher for longer. That could also mean that foreign investors are going to start picking up dollars, which means that they're going to benefit from a higher yield. So if people are not buying the US bonds and the yields keep on going up, even the 2-year surpassing the 5% mark, that means foreign investors are going to start planting their money into dollar, which means that you've got yourself a stronger dollar that can only warrant that investors are going to start buying stocks because their stock value in terms of dollar is increasing. Okay? But the best way for it, in my opinion, is to pay attention to accumulation and distribution days. Look for volume to close at least above the 50-day moving average. And if you don't have this chart, look for the percentages of the NASDAQ and the S&P. If it closes above 1% on a positive day, that means it's an accumulation day. If it closes minus 1%, it means it's a distribution day. Use those metrics to try and work out whether you should be buying Bitcoin or not, because we are on the assumption that Bitcoin follows the stock market. Okay? Now, moving on from that, ladies and gentlemen, we go into other news as well. We've got here that it says, can crypto traders outpredict Wall Street on Coinbase quarterly one earnings? So we've got Coinbase's earnings coming up. Now, if it is good for Coinbase, then it's going to be good for Bitcoin. We just quickly go back into this chart and search for Coinbase itself, and you can see that as of late, it has been really good for Coinbase. I'm going to be honest with you. And you can see that we've got this $236 mark. We did surpass the projection that we wanted to see it go over above the $200, nearly $300 mark. But we got towards 283, but we didn't quite make that 300. But nonetheless, we've actually now got a pullback, which is starting to show a little bit of interest in terms of price. But look down below, the volume, it's not there. That's the problem we've got. Now we go over to Bitcoin and correlate that information and say to ourselves, okay, if Coinbase could and may actually look like it's going to do well in its quarterly earnings when it comes out on the 2nd of May, then we can only make the assumption that Bitcoin is probably going to be trading sideways, because if Coinbase does well, then that usually means Riot's going to do well, Mara's going to do well, all the crypto stocks are going to do relatively well when Coinbase does well. They have this correlation. They tend to work together. But looking at Bitcoin's price action on the 1 hour time frame, we can see that as we head into the New York Open, we've got Bitcoin trading sideways, and it has done very, very well, to say the least. It's been contained inside of this 800 EMA, which is this blue line, and it's been doing very well at the psychological high, something we've got to pay attention to. The bids and the offers. Well, let's just have a look at what's going on. Now, I always look at this, and this really will help you understand how and what to anticipate in terms of the relationship between those who are buying and those who are selling. Now, just a little bit of background. What do we mean by bids and offers? Well, bids, as you can see, to simplify it for you, bids is where they're going to be buying. And the only way that they're going to be buying is if people are aggressively selling. So weak hands who are selling, their contracts are being picked up by the bidders, who are the passive buyers in the marketplace. So they have limit orders. And you can see all these green lines here are limit buy orders. So if we just go over to yesterday, you can see that Bitcoin hit 65,800, and we saw an initial amount that showed 1 million, and they actually transacted 4.73 million. Happy days. That means that someone is showing an interest at this price point. Now, we have had some offers, which is where people are selling the Bitcoin. You can see someone had placed an initial amount of 1 million to sell Bitcoin, but it actually grabbed the interest of others, and they ended up selling 17 million. Now, we don't know if it was one individual who sold 17 million or a collection of orders pulled together by the exchanges to effectively sell at that price point. Remember, when prices are rising, that's when the offers are being triggered, or the asks. That means they're selling. And the only way that they can sell is if participants are coming into the market to buy. Who's buying? Chads, all the guys who are the moon boys, the anticipation, the excitement of Bitcoin to go higher, the bulls, the Bitcoin maximalists, the enthusiasts, they are all stepping in because Bitcoin is rising, and they can only buy if someone is having an order there ready for them to sell. When you understand that, you'll then think twice about buying Bitcoin when it's shooting up, because then you'll want to know when will the bids want to start buying as it's pulling back, because ain't no one with a brain the size of an ant will want to buy Bitcoin as it's shooting up. They would have missed the move, so they would naturally want to wait for Bitcoin to load up. You only look at it from here. Look at this. You can see in this point here, Bitcoin shoots up. Everyone starts selling, but that's on the back of people buying. Then you've got the people over here who had been buying Bitcoin and getting frustrated because the move isn't continuing. Then it starts to pull back. You can see it's pulled back, and we saw a nice sharp red vector candle at that point, and that effectively had shaken out all of the weak buyers and made them effectively start probably leverage trading and go short, which is where the bids came in. You can see we had a bid order down here of around 5.2 million, when there was an initial order of 1.19. So the bids came in as price came in lower. That's when you're buying, when Bitcoin pulls back. And then, of course, the rest is history. They had now marked price up. And you can see in this candlestick right here, big green vector candle. Well, you can't see it on here, but you go into the charts, there's most likely a green vector candle. There it is right there, that green vector. And then they've marked price up from that point. Happy days. Okay, and now we've got the same behavior. It's consolidating, going sideways. All right. Now, going into Bitcoin on the daily time frame for my holders, which quickly go over to that, you can see that Bitcoin is currently sat within the 50 EMA cloud, which is this purple area right here. Now, I have said that the 50 EMA, or all EMAs, are somewhat laggard, but when you're using higher time frames, they kind of do give you a bit of a heads up on what is likely to be continuing in the near future. Now, something that's caught my attention is the 5 and 13 EMA, which is this yellow line right here, which is the 5, and this is the 13 EMA, which is the red. We're starting to see sort of an expansion where they start to spread out, okay? You really want to see them expanding, because then that would suggest momentum is coming into play, that prices are, in this instance, starting to rise up, okay? Now, we look on the chart and we can only make the assumption that Bitcoin holding this price range is only going to continue to go higher. But we do have these vector candles down here, but we had already had a test of those points and they've moved away from them, which is good news for us. Now, this is for the holder. If you're considering buying Bitcoin within this range, in my opinion, I think it would be safer for you to start loading up inside of this range, but keep it to a minimum. Do not put too much of your capital. Do not overexpose your capital, because Bitcoin can simply roll down from this point and shake out some weak buyers. A trigger to help you understand if you're in the right spot is if you start probing, which means testing the market and only opening a small position, wait for the 5 and 13 EMA moving averages to expand. That way you're in line with the momentum, but pay close attention to how price behaves on the 5 and 13 EMA. So if we just go over to this right here, look at how the 5 and 13 EMA are behaving, yeah? They're moving upwards. You can see that price is always maintaining itself above the 5 and 13 EMA. Now, I've always said, do not close your position unless you are given a reason to do so, which is why for the holders, a good routine for you should be, when you come to the charts at the end of the day, look to see if Bitcoin has traded or stayed or closed above the 5 and 13 EMA or below it. If it's below, then you might want to start incorporating DCA. Or if you're a leverage trader, you might think, you know what, as long as it stays below the 5 and 13 EMA and price doesn't go above that, I'm only going to assume the direction is lower. But if it stays above the 5 and 13 EMA, and for the past 3 days it has done, then we are effectively waiting to see if Bitcoin can sustain this and continue to the upside. So at the end of each trading day, look at how price has behaved above in relation to the 5 and 13 EMA. And if it's above it, then we are good for higher prices. Just do that at the close of every trading day with Bitcoin, okay? Hopefully the test of this moving average will then see Bitcoin move to the upside. But as I said to you before with the stock market, we want to make sure that as long as the stock market does bring us the volatility and we do see volume coming in, quickly going back into the NASDAQ, we'll go to the S&P this time. We want to make sure that the S&P is showing promise of volume and the NASDAQ gets above the 50-day, then we will then be comfortable and more confident that Bitcoin is going to continue higher, okay? Having a look at yesterday's setup. So these are the setups that I provided for the Platinum members. And if you want to take advantage of these sort of setups, then head over to tradersreality.com and you'll be able to take advantage of these situations. So out of all the setups, they all came through yesterday. Oil didn't really make the full recovery to the violet vector candle, as you can see over here. But we did see the move to the upside, and we had caught the moves, especially on Bitcoin. Bitcoin did very well, and so did Euro. But the good thing is this. Notice what was going on here, and this is really helpful for you guys. Can you see how you've got the confluence of, well, you've got the 800 EMA. Oh, see, I'm really reluctant to say that the moving averages really do help you, but they give you insight into, here's an example. The best way to use moving averages is if they sit in other confluences. So you can see in front of you here, you've got the 50 EMA and the psychological high and the 800 EMA all coming together in this chart. And this is what we had anticipated from this point. We had expected that Bitcoin would likely come down first and then initiate a reversal to the upside, which is what we got. You go into it, you can see it was this point right here. So they come back down. Just look at the test. The stopping volume candle came into action. I would prefer a stopping volume candle rather than just the confluence of the 50 EMA, the 800 EMA, as, or should I say, even the psychological high, as a means to say, yep, I'm favoring higher prices, or I'm about to make a decision on the trade. The reason being is because a candlestick is the true representation of behavior. A moving average is not. It's the collection of the last 50 days, or the last 5 days, or the last 15-minute candles, or the last hour candles. For me, moving averages are only a tool to back up the bigger picture. In this instance here, on the setup, I'd expected that we would get this behavior. Look what's going on over here. You see the red vector candle, okay? That area. Look at the green vector. Price marks up, it comes back down, red vector candle initiates the reversal, back up. Look what happened here. Price comes down, we anticipated to see vectors inside of this zone, initiate reversal, back up. Go into the setup, that's exactly what had happened. So we're starting to see this behavior in Bitcoin, which is why when you go over to Ethereum, you're starting to see it. Look, Ethereum is trending upwards. Now we are getting a little bit of activity in the altcoin market, and hopefully if Ethereum can sustain itself and continue its move to the upside, then we're going to see higher prices with Ethereum. I would want to see Ethereum clear the 800 EMA in today's market, so hopefully we can do that. I mean, we've got this big red vector candle over here, then it's just screaming vector recovery. We just need to see one big major green vector to come into play with Ethereum to then suggest the idea that we're going to keep moving up. But remember, if they are trending, after the green vector candle comes into play, just look at this area here. Price comes up, pumps up, traps all the buyers. Yeah, happy days. Then they bring it all the way back down. Stopping volume candle right there comes into action. Where? 200 EMA, 850 EMA, and then you've got the confluence of it being in the midpoint of the psychological ranges. Yippee-ki-yay to the upside, they break higher. So the same logic is likely to come into play with Ethereum moving forward. Okay, quickly going into Solana, you can see Solana, tricky beast, man. Solana is a tricky asset. It is trading sideways, similar to Ethereum, but it is above the psychological ranges, which is a good sign. Pay close attention to this collection of vectors right here. It's already hit its 800 EMA. I'm looking left and I can see we do have some imbalances at the side of the chart right there, which could suggest that Solana could be going for it later on. But just be very mindful with Solana. It is a different beast. Sometimes it trends nicely, but other days it can just consolidate and do this behavior right here. And if you do get that feel for Solana where it's not moving, just be careful with it. Don't trade it and just let them trend so that you can then take advantage of momentum plays rather than get caught up in consolidation. All right. Quickly going into the euro, you can see euro is pulling back right now. And we do have the relationship of the euro and the dollar. And because there's no news announcements coming out today, I would be expecting the euro to make some movements. We do have this blue vector candle recovery zone, so we're going to be waiting to see if euro can actually sustain this point and try and climb up a little bit more, but just be very careful with this range. We do have a confluence zone right now, so we just need to be mindful of that. I want to see euro at least clear this high up here, but if we don't see that, then euro more than likely will probably stay sideways because you've got news coming out tomorrow. Look at it. Unemployment claims, pending home sales, and these two figures right here are pretty much going to dictate where we're going to end up if we're going to see the stock market continue higher and, of course, the dollar climb up as well. Don't forget today, ladies and gentlemen, you've got Meta Platforms. They are going to be declaring their earnings at the close of the market. So just pay very close attention to how Bitcoin and the rest of the gang behave. All right. For my guys who are following Tesla, you can see Tesla right now at the gap up. Look at that. They've completely closed 1, 2, 3 gaps in the chart. But just be careful. It's an even bigger gap that needs to be closed. So those of you who are involved in Tesla, you had yourself a discount at $144. Of course, out of hours markets have seen Tesla jump up nearly $20. So just be careful and keep an eye on Tesla in the first hour of the market. That way you're not going to get caught out in price coming all the way back down into the actual closing of the gap. And if you want to start buying, at least wait for them to close 50% of this gap, to then assume that if investors simply don't care about what's going on with Tesla's estimates and their earnings, and they look at the bigger picture, then Tesla will more than likely start continuing back up to try and take out this red vector candle region over here. Okay? If you've made it this far, mad love and respect for passing through, ladies and gentlemen. Make sure you hit the like button and subscribe on the way out. But more importantly, I won't be going live this evening, so I'll be checking in with you all tomorrow for another video. Remember, to summarize it, if you are a Bitcoin holder and you want to load up more Bitcoin, just wait for the daily close on the 5 and 13 EMA. If you see price still containing itself above those two moving averages on the daily time frame, then the principle would say that Bitcoin is going to continue higher. Other than that, ladies and gentlemen, mad love and respect. Peace.